Hey guys, this is Simon with Trade and Perform Coaching. I wanted to really follow up. Again, we're doing a series on kind of focusing on where the volume points of control are and the naked volume points of control and how those help us make trading decisions. So before I go much further, I wanted to just go in really quickly and hold on a second here. Let me get the disclaimer up. I'm just going to do a brief version of the disclaimer tonight, which is basically legal notices. Look, trading is dangerous. If you do not know what you're doing, you can lose a lot of money very quickly. Nothing in the video or on my website is a promise of performance, either in the future or in the past, right? Past performance does not equal future results. What I'm talking about is my trading plan, and my objective is to help teach others how to create their own trading plan and how to execute their own trading plan to the best of their ability, okay? Before you trade, consult a registered financial advisor and risk trading plan before investing or trading in any financial instrument. Okay, guys, so we got that covered. Today on in the trade plan, this was the chart, right? And we were targeting for a short. So for a long, yes, the zone worked. The initial support resistance zone worked on first touch both times, right? But the rotation was very small. This is the first time we had a small rotation. So the objective was today to either, and this is going over the volume point of control trade review that we did earlier. The objective was to either take a long into the 2379, 2378 and a quarter trade location for a push back up towards 2391. That was my hope. We didn't get that, right? And then plan B was, if you're aggressive and you're willing to short in this environment, in an environment that goes up or straight up, the objective was to short 2391.75. It was the naked volume point of control, and it tends to act as a good support resistance area. So what we were discussing earlier on the homework, guys, specifically in the room, what we said earlier today, how long does the trade take to complete? If you could take the trade and not worry about it at all, what kind of stop would be necessary to make that trade work? And then finally, the time function. How long would it take for it to work? So now that we have all the data, we're into early Asia, it's about 9 o'clock in the evening Central Time, and we can see the first time that we pushed into that volume point of control was right here at 11:15 Central Time, 12:15 Eastern, right? It took from there until the close. So the market closes at 3:15. This is 11:15, so it was 4 hours, right? And in that 4 hours, the maximum favorable excursion. So you'd want to go back to the homework notes that we did, and you'd want to type in just like this: maximum favorable excursion during the RTH, right? As we came down all the way from 2391.75 to 2389.75. So there was plus 2 points on the bid, okay? That took from time-wise from 11:15 all the way over to 1:05 p.m. right? So 11:15, 12:15. Let's just call it let's see, 11:15, 12:15, roughly 1:15. So 2 hours to get 2 points, right? Very, very slow. But let's take it another way. Let's say you decided that that volume point of control was a critical location where what would have been the maximum adverse excursion and the maximum favorable excursion. So if we look and we pull this up into early Asia, right, we can see early in Asia we popped all the way up to 2394.75. So our maximum adverse excursion on that trade, had we just stayed in it with no time limit, and we had patience of saints, which, by the way, for those of you who are new in the room, that's not me. I will never sit in a trade for, especially once I've already gotten 2 points, I'm at least moving my stop to break even. But that's me. But I still want to know what the trade would look like so I can go back and see my data, right? So, so the maximum adverse excursion on this trade to this point has been 2394.75. That's 3 points. Okay, so I'm going to write in my notes over here because, again, I'm trying to build a portfolio of information. 3 points, maximum adverse excursion, okay? And then what's my maximum favorable excursion? At this point in Asia, we've rolled all the way down to 2386.75. Okay, so my maximum favorable excursion from 2391.75, 90.75, 89.75, 88.75, 87.75, and 86.75. So I now have 5 points of maximum favorable excursion. Okay, so the point isn't on this trade, the point is not, hey, did I have some kind of magical insight into the market? Was there a moment where I was trying to force the market to do what I wanted to do? No, I'm looking at just the opposite. If we look at the quality, remember this was the this is the volume point of control, and it acted exactly as it was supposed to do, right? So what do we do around volume points of control? We push, right? We fell short here, right? Market rejected. That was disappointing because it would have been nice just to get it to push in and reject down at first. No problem, we stay on course. Run up. This would have been your short location. The heat you took initially was approximately from 91.75 to approximately 93. It was almost 5 ticks, and then it rolled down for 2 points. You still have a better than 1-to-1 RR intraday, right? If you decided you wanted to hold for a larger push because we were already very extended or for whatever reason, you now know that you had 3 points of maximum adverse excursion to the top and a roll down for 5 points, and you still have a better than 1-to-1 risk reward. If you collect data over time, and again, as a coach, when I'm coaching people one-on-one, I reinforce, collect your data, understand how your trade works, understand how the price action at that point is going to work. And I realize, hey, this is kind of boring, right? We waited all day, it came here, it danced around, but the trade did work. There's no question about that trade location, right? Whether you took it or not because buyers were in control does not matter, right? What matters is what can you learn from it, so next time you learn, hey, what kind of price action can I expect from the volume point of control, or a naked volume point of control when it gets there, because those naked volume points of control are littered all up and down the chart, and they are key locations. And so learning how to respond, right, and being willing to be patient to let the market get to those locations, because you know you have so much of a higher odds of having a profitable trade from that location, means everything. Anyways, this is again a follow-up from a trade review I did in the room today. If you'd like to learn how to trade with an edge and actually learn how professionals trade and consistently pull money out of the market, how they avoid that boom-bust cycle instead of jumping from one strategy to another strategy, come join us in the room. You can email me at tradeandperform@gmail.com. Send me a Skype message. Well, you can't send me a Skype message because I'm not going to post my Skype name here, but you can send me a Twitter message, or you can send me a message from StockTwits. Anyone's welcome to come and join us for 5 days on the house. And just so you know, it is $95 a month to get the charts, to get the real-time market commentary in the room, and the one-on-one tutoring. Also, we convert that into in-the-room real-time lessons so that you can apply what you've learned if you are coaching one-on-one, and it becomes a very powerful package for making money long-term. Anyways, guys, again, I thought it was worth following up this evening, so this is probably the shortest video I've done in quite a while, but this volume point of control, understanding how volume points of control work and what the price action is around them and how you can take advantage of it, is very, very, very important. So anyways, hope everyone had a great day. Stay positive, believe in yourself, know that if you take time to learn how the market works, you can extract as much capital out of it as you'd like, but you've got to work in harmony with the market. You can't come in with a fixed idea of what the market's going to do. You have to know where the market's going to have likely inflection points and wait for the market to arrive at that point. If you'll do that and work with the market, and all the money that you want to make is sitting there for you. So I think it's a very important concept. Anyways, have a great night, guys. Talk to y'all later.